Now, it's probably better for your sanity if you did not try to keep track of the market as it was going along today. Let me try to put a very confusing day into perspective. Obviously, the main action was in Moscow, where overnight the Central Bank of Russia very dramatically raised rates. This is what's happened to the ruble over the last 2 days. In round numbers, it fell 12% on Monday before the announcement. The immediate response after that was to gain 10%. Then it clattered down 22% from there until staging a rally of 12%. Any time a currency as important as the ruble moves double figures percentage points in a day is a remarkable, huge event. Obviously, what we've seen in the last 2 days in the ruble is something quite extraordinary. Broadly, I think I've picked up a lot of anger from market participants today directed towards the central bank. The sense is that they allowed themselves to get far too far behind the curve, which is why they needed to be as dramatic as they had, and further that they were not as enthusiastic as they should have been to follow up that rate hike with the kind of foreign exchange intervention that would have rammed it home. It still may be perfectly possible that they will be able to follow it up with foreign exchange intervention, but they're being tested by the market. Now, what were the ramifications elsewhere? Well, you saw bond yields fall in the large developed markets. The 10-year yield very nearly got below 2% here in the US. It ended up back at 2.06%, roughly speaking. As for equities, this is what's happened in Europe. So obviously a day of very big swings, ending up very positively. In Wall Street, which has recently closed, the S&P took another leg down at the end, fell more than 2% from its high for the day, off 0.85% for the day, led largely by the big tech names that have been doing well of late. As for oil, which is the root of all these great concerns, well, it sent out some confusing messages. WTI was almost precisely flat for the day, but Brent crude fell significantly. Final point, which I think it's very important to note, is that even though the dollar is rising and creating great stress against emerging market currencies, the trade-weighted index, comparing it to its largest trading partners, has actually seen it fall quite significantly since the beginning of last week, down about more than 2% since then. That shows that something is afoot. Well, that probably is that people are now beginning to bet that the Fed is not going to tighten interest rates as aggressively as perhaps it once intended to do. We have a Fed meeting coming up. Everybody's expecting them to signal interest rates are coming sooner rather than later by removing some of its language about interest rates staying low for some considerable time. There is now a lot of uncertainty about that. That will create a lot of very interesting market reaction once the Fed's statement comes out. Many people are drawing comparisons with 1998 and 99, where there was a crisis in Russia that created great difficulties for markets, and the Fed, in hindsight, overreacted, cut interest rates too much, and unleashed the speculation that gave us the dot-com boom. All kinds of interesting scenarios now being discussed, but ultimately everything depends for the next day or two on the behavior of two very different central banks. One of them's in Moscow and the other is in Washington.